Sorry. I should have done the housekeeping as well, just to say that we're going to record this session. Please, if there's any reason you don't want any picture, please feel free to keep your camera off. If you are happy to have your camera on, that always helps. When we get to the questions, we hopefully won't be such a massive group that we can take those questions in person or through the chat. Okay, I'm going to hand over to you, Fayad.
Thank you, Mel. Good morning, all. Thank you very much for joining us today at the session. So yeah, very briefly, Addressing Imbalance program came about in last year in 2021, and effectively we, through research and through reports, we recognized that marginalized groups, minority groups, racialized groups, groups from refugee backgrounds, for example, and disability backgrounds were underrepresented when it came to social investment. And effectively, the program Addressing Imbalance is looking to really bridge that gap and really understand how we can best support these communities who are underrepresented when reaching capital and in particular social investment. And the way in which we came about with this investor clinic is that we reached out to our communities, we kind of listened to our partners that we're already working with, and really understanding, what are the main challenges and barriers that they face. And time again, we had frustrations around, listening and understanding, what is needed from, when presenting to an investor, to pitching to them, to understand, how to really, gain capital and how to apply for social investment. And these were barriers that we came across quite constantly, and we thought, what better way to do than to actually bring our community, our partners, and people that we would like to support along with some investors in a room, and really just to have open, honest discussions. So yeah, it's great to all have you all here today, and really looking forward to seeing how our event today pans out. Thank you.
Thanks, Fayad. That's great. So sorry, Olivia, I think I clicked on buttons when you were clicking on buttons. Apologies for that. That was two great minds thinking alike at exactly the same moment. So okay, great stuff. So I'm going to just spend 5 minutes just talking a little bit about what social investment is. I think this is always really important, just in case there are any doubts in the room. I'm also conscious as well that we'll have a wide range of experience and also of readiness. So few house rules that go with this is there are no stupid questions. If you're sitting there thinking something, then somebody else is bound to be thinking it. So please do ask us, call us out. We're rubbish with acronyms and jargon, and I have sat in many rooms listening to great speakers talking about things like mezzanine debt and mezzanine finance, senior debt, and thinking, oh, I'm not quite sure that I know what they mean. So we do spend quite a lot of time with our jargon buster trying to cover that, but please feel free, if any of the speakers talks about something that you're not sure you need more explanation, please do let us know. So we're going to start off with a quick whistle-stop tour about what is social investment, and the very first thing we're going to do is do a little bit of a poll. Those of you that have been in events with us before know that we quite often use a tool called Menti. So you can do one of two things. You can go to menti.com and type in the code, or I think Olivia posted in the chat. Yeah, if I had posted in the chat, the direct link to that. So we'll just give you all a minute or so. It helps if you've got your phone to hand or another screen if possible. So as I say, two ways, menti.com, and then you can type in the code, or you can use the link. So the code is 35915791. And what we're asking you to do here is, on a scale of 1 to 10, how would you rate your knowledge of social investment? So probably if you're somebody who works in the social investment space, obviously that might skew the result a little bit, but if you're somebody that's come looking for information today, we're really keen to get that sort of benchmark of where the group is at. Because I know we've got, as well as our speakers, we've got a few other investors that have joined us today, which is great. You can see on Olivia's screen sharing, we've got about 9 people, 10 that have, and there's 25. So I'll probably wait till we get up into the high teens here, just to give us a sort of benchmark of where we're at. This is a tool that we use actually in most of our events. So I'll be able to give you sort of a benchmark of how this sits against other events like Let's Talk Good Finance, etc. Okay, we'll just give it another 60 seconds. We're up to 13, but we're hovering around about the 6 mark, 6.3, 6.4, which is actually, when we do these, it usually ends up just under the halfway mark. So there's definitely a range of experience. And you can see there are some people that are starting. If you look at the graph sort of shape, some of those people are starting this journey, and this is very early, and there are others that know a little bit more and may have more specific reasons for coming. So let's just move on to the next question. I think that's next here. Okay, yeah, some of you already started putting this in for me. So what do you hope to gain from today's session? So networking and gaining insight, brilliant. That's why we definitely ask you to put introduce yourself in the chat, because finding other contacts and people that are having similar experiences or offer different things is always another added bonus of being at this event. A bit more about understanding demand. So I hope that's from some of the social investors, or maybe capacity builders or networks. Understanding the landscape of social investment, that's really important, and also gaining confidence.
We need to do some more with. Some of the things that
I think we just need to again, we might have some new entries. We just need to do mute for all, if that's okay, Olivia, just getting a bit of feedback.
Yeah.
Confidence is a really important piece. My own personal experience here is that when I joined Big Society Capital 7 years ago, having been a social entrepreneur myself, I thought I knew a bit about repayable finance and social investment. If I'm honest, when I came to Big Society Capital, I very quickly worked out I didn't know very much at all. So it's all been a learning journey for me. And I don't think there's ever going to be a time when you'll know everything. And there was certainly not, this is not aimed at trying to make anybody an expert. It's about just giving you that sort of base level of knowledge. But the confidence piece is really important here. Some of the barriers that we heard about is actually about the trust. It's really being able to get to understand that social investors, you know, then don't have high street presence. That as a nice quote from a piece that I did about that, you know, they're generally nice people, but you need to get to know them. But it's also about the barriers, the trust and confidence. If you do decide to take on investment at some stage, this will be a long-term relationship. So having these knowledge, building knowledge and making connections is really important. And a really important one that I just got there about gaining insight on how investors are tackling imbalance is really important, not least because we know that of the existing challenges, you know, it is not acceptable that organizations, more diverse organizations with more diverse leaders across the spectrum of protected characteristics are less likely to be able to find the investment they're looking for. And this is one step, hopefully, in trying to do something about removing some of those barriers. Okay, Olivia, we'll share those afterwards. Let's move on to a very quick piece, so I'm conscious of time. I'm going to try and whiz through my slides a little bit. Just a quick introduction to social investment. So I suppose the good news is that social investment works whether you're in the Highlands of Scotland or the lowlands of Cornwall, but it is money that you need to pay back with interest. And it is really interesting. One of the things that I'd be keen to explore is just that appetite, risk appetite. We asked some of you that questions before about, you know, how willing you would be to take on grants. Probably not surprising, everybody said 100%. But then when you look at how willing you might be able to take on other types of investment, whether that is, not many organisations can take on equity, some, but more organisations might look at taking on debt, which are loans, then there was a range of different risk there. If we just move on to the next one. Yep. But what is social investment? I could talk all day and I don't have all day. So the easiest way for me to do this is just to play you a really short video from Good Finance, which tells you what social investment is. That looks like it's having some buffering problems. And if it's weird, isn't it? It's worked perfect. Do you just want to move on to the next one and download it, and we'll come back to it?
UK, charities and social enterprises like yours are tackling some of society's biggest problems. Maybe you've set up a coffee business to give people the skills to get back into work, or are running a nursery and using the profits to support local parents. Whatever your mission, you'll need money to help with cash flow, to grow your organisation, or to buy an asset like a new building. You might even need finance to kick-start your new venture, and that money could come from traditional grants or donations, or as a loan from your local bank. One option is to get that money from a social investor. That social investor could be an organisation or an individual, and you can borrow their money or offer them shares in your organisation. But what makes a social investor different? Well, they don't just want to see a return on their investment. They want to see their money being used for good, helping you to keep delivering your social mission. Sound good? To see if it's right for you, check out goodfinance.org.uk.
Lovely. Thank you, Olivia. Got there. That's fine. I don't know whether that's worked perfectly, hasn't every time, but anyway, we got there. So I'm going to whiz through because I'm conscious that our speakers are going to tell you a little bit more about their organisations. I'm just going to give you a very brief overview of a little bit more about social investment. So this question about is social investment worth it? Where does it sit? And I said this yesterday in a presentation that I did to an event. Social investment is not a thing in its own right. It's just another tool to create impact, and it should sit in your financial toolkit alongside trading, donations and fundraising, contracts or payment by results, borrowing from mainstream banks, and then obviously knowing who in the social investment space does what. It covered in the video these particular areas that you might want to think about social investment for, because we always say it's really good to have an idea of what you might want to use it for. So is it to help you buy an asset? So that's often a building, but it can be anything that a loan can be secured on. Delivering a contract, maybe to cash flow it. Kickstarting your organisation. Notice we didn't say start, and we can perhaps come back to that. It's more difficult to secure money, not impossible, but perhaps a bit more challenging to actually get startup capital. To grow your work, so that could be scale, and also to develop new innovations. And of course, it might not necessarily just be down to one of those things. Most social enterprises and charities have quite complex work streams and way their income comes in. So it's quite often a mixture of those things. So key considerations. What do you need it for? How will you repay it? Don't forget, I said it's money you have to repay with interest. And again, there can be a number of ways that you do that. And then we also said in the video, what social impact will you create? Probably one of the key differences between grant and repayable finance is that it isn't about potentially having to meet an outcome that a grant funder has. So sometimes social investment can be more flexible. A social investor will want to know what difference their money is going to make, and you will need to be able to evidence to them that difference. But this is probably not about having, there's not one tool or one way. It's about you being really clear about what's important to your organisation. We always talk about proportional and relevant in terms of measuring and evidencing social impact. And also, really importantly, there are no numbers without stories and no stories without numbers. So this does not have to be a 20-page glossy brochure. It's about articulating the difference that the money that they'll be lending to you will make. And really important piece, because you often get people ask this question about, is it morally right for people to make money out of lending money? Well, just a big reminder that 85% of the social investors that are listed on Good Finance are actually social enterprises or charities themselves. Okay, so two types of investment generally, and we've got speakers that will talk to you about these two different types. There is debt, which is loans. That's when an organisation borrows the money and pays it back, usually with interest over a fixed period of time. On average, 3 to 5 years, sometimes 7 years, but usually it's slightly more short term. And then equity, this is when an organisation sells shares or to an investor. So they own a percentage of the organisation. Now, one of the challenges here is there are quite a lot of the governance structures within the social enterprise and charity space that don't work. It's only really community interest companies limited by shares, registered societies, which are the old industrial and provident, or community benefit societies. And so you will start to hear terms like blended finance and quasi equity. And I'm going to talk a little bit more about what those are after the investors, depending on who covers them. And as in the video, you can get investment either from an organisation, and we've got some of those examples coming up, or individuals. And some of the ways you might do that are things like community shares or crowdfunding. Okay, So who are the funders? Well, you have this whole spectrum. It is a challenge because of the 80 plus social investors that are listed on Good Finance, you won't find that they have high street presence, and they sort of vary in range of risk. This is often depends on where their money came from originally. So on the left hand side, you've got, you know, those that are completely interested in a social return and maybe their money is philanthropic at source. And on the right hand side, you've got where financial return is the major consideration. That's probably where you would see more traditional investment, maybe through high street banks or mainstream lenders. Social investment sits somewhere in the middle, but the thing that is really important is you understand the level of risk and where a social investor operates. Not all in social investors do the same things. I'd usually explain this slide, but I'm going to wait until after the speakers because they'll give you a little bit more context to this, and then I can come back to this and answer any questions later on. Okay, so we also had, I think it was Bertie asked, can you have a presentation? Yes, you absolutely can, no problem. And also, if we get any really interesting links and things that come up in the chat, we'll share that with you as well. But I wanted to keep my slot as short as possible because the main event, not bigging up the investors here, is having an opportunity to hear from the investors, but then most importantly, protecting the time to take the questions from you. After all, this clinic was something that many of our partners in Addressing Imbalance wanted, and we want to give you the space and time to be able to ask whatever you want to. So I'm going to hand over straight away to Anoushka, who works for CAF Venturesome, and we're going to hear for about 10 minutes from each of the investors. Keep your eyes on your direct messages, because if anybody skips over the time, I'll be sending you little messages with 1 minute to go, but I'm sure you won't, just to protect the time. Anoushka, over to you. Tell us more about CAF Venturesome.
Hi everyone, I hope you can see my screen with the presentation. Thank you all for joining today. So I work in the investment team at CAF Venturesome. We are part of a larger charity, the Charities Aid Foundation, and our team provides investment from 25,000 to 400,000 to charities and social enterprises across the UK. Through our funds, we offer different types of financing, usually loans or what Mel mentioned, blended finance, which is a package of a grant and a loan together. Our loans are low interest or interest free, depending on the fund and the stage of the organizations that we are funding. Usually our loans are 3 to 5 years, but they can be up to 10 years. And most of our loans are unsecured, so suitable for organizations that might not have assets or property or access to bank loans. You can see here on the bottom right, we're also able to create bespoke repayment terms. For example, if an organization needs to do some upfront investment to get a program off the ground before the income materializes, we can write terms where they'd pay interest only for the first 6 to 12 months to keep the monthly payments low. And we like to consider ourselves a very friendly lender. So during the term of the loan, we're able to give repayment breaks if financial difficulties arise. And indeed, that is something that we did a lot during the pandemic, as you might imagine. Yeah, so overall, our financing is really designed to be affordable and flexible, and for many of our clients, an investment from Venturesome will be their first time taking on repayable finance. And I'll just quickly say the reason that we have such flexibility is that we're very lucky to be funded purely by philanthropic capital. And what that means is that our capital comes mainly from private philanthropists or corporate foundations who give us the money to lend or grant out. So we don't have to pay them a return on the capital, but we have to charge obviously to cover our own costs. So I will quickly go on to who do we support. I won't spend too much time on this, but these are our main eligibility criteria. The key one for us, because of the philanthropic capital, is that we have to show in legal structure the charitable aims of the organizations that we support. And then here are some guidelines that we usually use on trading history and income. Those are not hard and fast rules, but that's typically what we look for in the first instance. So on to the good stuff. How can we support you? We are extremely excited to be launching an accelerator program later this year. The pilot round will be for female founders from ethnic minority backgrounds, but if this is successful, it's something that we really want to grow and expand to open to more founders from underrepresented or non-traditional backgrounds. We have a delivery partner, Hatch Enterprise, who some of you might be familiar with, who will be providing a very full suite of non-financial support to complement our investment. What does that look like? In the pre-investment stages, it's building expertise, like both generally and then giving you bespoke support for your business. It will cover things like strategy, funding, marketing, finance, legals. It's really supposed to be very holistic in its approach. And they will also support you through the investment due diligence process, which I'll come on to next. And that's where we at Venturesome come in. So we'll be providing blended finance packages, part grant and part loan to the participants. And then there'll also be ongoing support from Hatch and Venturesome post the investment. So if this is something you're interested in hearing about when it launches, please drop me an email and I'll be happy to keep you on the list. So in the meantime, how can we support you on the road to investment? So we have existing funds that we obviously lend from, and I just want to talk a bit about our process and how we design that practically to make it as supportive as possible. So how it works is we, the investment team, present investment proposals to our investment committees. They have the final decision-making power. The committees are usually made up of independent members from outside of CAF and some senior people within CAF. Once we have an organization that is eligible for investment and we think it's a viable candidate, we prepare that proposal and that pitch through this process called due diligence, basically scoping out if this is the right investment for us and for the client. And in this process, we dig into things like social impact, the business model, risk factors to those, who are the key people, and it's quite an involved process. It's quite different from applying for grants, which some organizations will have done before, as we obviously want to convince our investment committee of two things. One, that this investment creates a high social impact, and two, that the money can be paid back. But we really do understand that taking on a loan for the first time can be stressful and time consuming. So I really try to keep the process as two-way as possible. We try to explain to clients why we need certain bits of information, how it feeds into the risk assessment. I always ask potential investees to tell us how easy or difficult it is to get us a piece of information. So we, that way we can say, this is 10 out of 10 important and you really need to spend your time getting us this, or actually this is 3 out of 10 important and, maybe we don't need to spend time gathering that information. And I'd also like to mention, it's not the case that if there are, big risks, like, I don't know, being heavily reliant on the CEO or maybe not yet having a board set up, that we'll say no. Usually we'll just try to make sure that when we go to the committee, we are in a position to say, these are the mitigating factors in place to address these risks, or, what are the client's plans for, improving these areas in the future. And so our job is, you'll hear it described as being the critical friend that gets you the approval of the investment committee. And yeah, I guess the flip side of that is we will be upfront with clients early on if we just don't think that our committee will approve an investment, if it's just not a suitable match. And sometimes that means that the client comes back to us later if their circumstances have changed, or it means that we signpost them to other sources of funding. And sometimes we might think it's viable, but the organization isn't ready yet to provide the level of assurance that we'd need to get an approval, in which case we look to do investment readiness support, maybe through our accelerator or something called the Reach Fund, which I will touch on next. So what next? Where can you get help? If you're thinking social investment could be just what my organization needs to grow, but I don't know, maybe you're feeling really excited like this lady I've got up here, or maybe you're feeling a bit like this guy at the bottom and finance is just not your thing. What can you do? So first thing, just email us. We're very happy to talk through the options and our process in more depth. I always like to remind people not to be intimidated by investors or jargon. It's nothing you can't learn, and we all have our areas of expertise. Just remember, you know your organization and the people that you help better than any investor. So lead with that. And I think you'll be all right. If you do need more support to get ready to be at a stage where people are comfortable lending to. You might be a candidate for the Reach Fund by Access, and that's a fund that will give you grants to do the work that an investor needs to be able to lend to you, and you'll get referred by a social investor and they'll explain the work that you need to do. So I've included some recent examples here of things we've referred clients for. So we had a relatively early stage organization that needed help building financial forecasts. We had another one that needs help improving governance and building an operational expansion plan. So yeah, and then at the bottom I've included some links to our CAF blog, which Joe on the call very kindly maintains with case studies, so you can get an idea of some of the organizations that we've lent to in the past, and also a link to our loan calculator, where you can input the amount of investment you need and get an idea of what the monthly payments would look like from our main fund. And then of course you can always reach out to us by email or LinkedIn, or we have a Venturesome Twitter as well. So I'll leave it there, but I'm very much looking forward to the Q&A. Thank you.
Thank you, Anoushka. That's brilliant. That was really helpful, and it was really good to hear some of that, some of the really practical stuff about where you get your money from, and we'll come back to that in terms of risk, which is great. I'm going to move on swiftly. John, you're up next. So if you want to come on and you carry on, we'll have your 10 minutes. Thank you.
Thank you. Right, there we go. Hopefully you should be able to see the slides. Are they on screen? Yeah, perfect. Cool. I'll start from the beginning. That's probably the best place. Right, okay, so good morning, everyone. I'm very new to Charity Bank. I joined in January. And my background, I've worked in social investment about 6 years before that. And I think addressing imbalance is really important. I think I'm quite lucky. I've worked in teams that have been quite diverse. I've worked for organizations that have held this at the forefront of what they're doing as well. And that's been really important and valuable, but there's way more work to be done. So I'll take you through a few bits here, and I look forward to getting some questions as well. So I think I've chopped off one of my colleagues in the first slide. That's Danny, whose hands you can see. He runs the kind of what we call smaller lending team up to £500,000. The loans there start at £50,000. We are a reach access point as well, so organisations can come to us, like Anoushka just said, about getting funding and getting some support around forecasting, budgeting, the preparation to make that less daunting for you as well. So yeah, it's really important to be part of that. So a bit of background about Charity Bank. We were set up and invested in by other social organisations. We're still owned by them. We have borrowers that invest money with us and want to see that that money is used ethically and well, with good social return. Since set up, over 1,000 loans have been made, with £400 million being advanced. And yeah, just to clarify, our lending starts from £50,000 and goes up to £5 million for each individual investor. Sorry, borrower even. We're spread across the UK. It's got impact absolutely everywhere. And that's super important as well. You need to be hitting all the different communities within the UK. Again, lucky part of my job is I get to see great parts of the UK. I'm now more predominantly based in the Southwest, but I really enjoy getting out and about, seeing what's going on, meeting people. That's always the best part of the job. Here's a bit of a breakdown of some of the lending that we do, the different areas. We do some faith-based lending as well. I think the array of borrowers that we have at Charity Bank is super diverse. That makes me really kind of happy and proud that we're getting involved there, but there's always the need to do more. So what do you kind of get social finance for? It could be an array of different things. The loans at Charity Bank got to 25 years. So it could be like a mortgage on a building. It could be to refinance. We sometimes see organisations where their current lender doesn't want to continue to lend to them for reasons only known to themselves sometimes. Sometimes it can be to bridge monies. If you've got a grant that you're waiting for that's coming through and you need some financing in the meantime to complete the project before the grant's paid to you. And it can be for growth and exciting new areas of development within your organisation. So yeah, there's a bit of a breakdown of what the kind of our customer base say their support means to them. I think contributing towards a social mission is probably the most important of it all, and helping them grow and do well. I think it's fair to say there aren't any bad social lenders out there, and I think the benefit, if you're thinking about taking on investment, is that versus a bank, is that you're getting someone who's passionate about what you're doing. They want to reflect the impact that you're having in their own impact report, but they also want to support you and do well. It's not painting by numbers. It's or a kind of computer says yes or no style. It's all about kind of being supportive and being there for your customer, offering maybe a grant or some other support when needed. So yeah, I think that's massively important. There's a bit of background regarding kind of what our loans do. We don't have kind of things like early repayment charges, which you might find a feature in some more commercial loans that you get out there, especially if on fixed rate borrowing as well. And we also provide developments of charities looking to build new buildings or expand what they're doing as well. So how do we start to kind of address imbalance? Well, we are working on a program at the moment that will be specifically driving towards lending to minority-led enterprises. That's super important. The Reach funders already mentioned, I think, is really helpful as well. It just keeps everything ticking over. It can be daunting. There's some great resources out there. Obviously, Good Finance with their search engine for the different investors that are out there, their website, their videos, the team, Good Finance as well, are really, really good and passionate about it. So that's a huge element of support that I would say. But yes, if you can get some Reach funding to give you a bit of financial support, for somebody to work on a financial spreadsheet with you, give you kind of a bit of confidence and enthusiasm and work with you on it. I think it's important that you still own your financial work, but to have someone there giving you guidance and support is really helpful. Here's a background in terms of when you're assessing a borrower, what do you look for? You want to make sure there's a really good sort of business plan. There's something behind what you're doing. That's the reason why you're seeking the investment. You're wanting to expand, you're wanting to grow, you're wanting to meet the needs of your local community, you want to do more. A loan has to be affordable, so it's not overstretching your organization. And we obviously need to see that you're reporting financially and you've got a handle. So the timely and accurate financial accounts would be those annual accounts that you'll produce. You might give to Charity Commission if you're a registered charity, or you give it over to Companies House if you are a KIC or a company limited by guarantee. Here's a case study of a borrower at Charity Bank. Just in terms, I think it's really important that we get the feedback from the customer. They're the most important part of this whole process and the best bit of the job, going and seeing the impact that they're making, what they've done differently, what they've then been able to do. There's a bit there about the computer says no environment. That can be really overwhelming, I think. I've had customers in the past who've had 16 declines before they've had that loan. They've been around, they've been around the houses of going to different banks and being turned down. People get scared, people get confused. Oh, you're a charity, you're a not-for-profit. Does that mean you make surpluses or not? That's why I always think social investment's really positive, because you're getting the support from the people who want to represent you and want to work with you, and want to share in your success as well. And we'll be there if things don't quite go to plan. So I think there's a jumper day that day. So there's my details there. If you want to drop me a line as a follow-up to the call today, super happy to do that, have a chat, have an email about, if you think, I'm just thinking about this idea, what do you think? I'm always happy to give feedback. I think that's a huge part of it as well. Let's be good partners as well as being involved in the sector. So yeah, so thank you, and I'll hand back, and yeah, look forward to the Q&A.
Thank you, John. That's great. And yeah, we'll circulate everybody's contact details afterwards, so that you've got them for future use. And I thought that was really good. I'm pleased I didn't go into explaining the difference between some of the different types of risk, because I think starting with Anoushka with CAF Venturesome, where your money comes from, and then moving on to Charity Bank is a really good sort of shows the two different ends of the scale in terms of with Charity Bank is where CAF, as Anoushka said, is fortunate enough to be lending philanthropic money, then Charity Bank's money mostly comes from deposits from other social enterprises and charities. So you can see that the level of risk that can be taken obviously has to be shared. So let's move on now to our next speakers. Hanna, are you and Philip, are you doing a together, double act, or one after each other?
We are, yeah. So I'll be just giving you a whistle-stop tour of social investment business, and then I'm going to lead on to Philip, who's going to delve a bit more into Ubile and our flexi finance programs.
Brilliant, off you go.
So firstly, I apologise for my voice. I do have a bit of a cold, so you're going to have to bear with me. But thank you so much for having me today, and thank you for coming as well. So like I said, I'll just do a very quick whistle-stop tour of the history of social investment business and how we have partnered with Ubile to kind of create a whole new program. So social investment business, we are an impact-led organisation. We partner, influence and invest into the social investment sector. So we were established in 2002. So we're actually coming up to our 20th anniversary this year, which is really exciting. I think we've got an event planned in June for that. So we first started out as the Adventure Capital Fund, which was a partnership of a lot of third sector organisations. This is a £2 million fund, which seems quite small compared to some of the funds that we manage now. And it was through the government to work out how to create sustainable community enterprises through the means of social investment. So as we've gone on, we've grown, and in 2007 we became established as social investment business, and we won the Future Builders Fund, which was the biggest social investment fund at the time. This was £145 million, and this was invested out through the means of loans and grants up and down the UK. From then on, we have managed to kind of constantly grow grants and manage them, as well as different portfolios as well. So we focus on three main areas, I'd say. For the grant side, the grants programme is to help charities and social enterprises and organisations with a social mission get investment ready and kind of really get them to a point where they're able to get loans and different funds. We have the loan option as well, which is we look at filling gaps in the market, and we do kind of try to target our funds to test pilot different projects as well, which is really interesting. And then the third sector of what we do, the third pillar, is our learning and development team. So this is where like the influence side of it comes in. So it's dedicated to looking at data, policy and researching different gaps, themes and inequalities in the social investment market. And we use this quite openly to help shape the landscape going forward. So we use this with different partners, and we have a lot of information on the website. Actually, we have a little ongoing dashboard of different social investment investees who've kind of applied, what background they come from, what themes they've got going on, which is really interesting to look at. And I'll put that in the chat after this. So I just want to talk a bit about one of our current funds that's open to then kind of digress into the real meat of it. So we currently have open the Recovery Loan Fund, which is a successor of the Resilience and Recovery Loan Fund a few years back. So the loan that we've got open now currently is aimed at anyone affected by COVID. Now, I've always said, well, show me an organisation who's not been affected by COVID, whether it's stopping trading, staff shortages, anything along that, everyone's been affected by it. So this is a 6-year loan period with a 12-month capital-free holiday, the first 12 months. So what this is we opened this fund, we actually created this fund from our own money, went out to market and got interest from investors. So it's a fund of £21.5 million to anyone affected by COVID. Now, to be eligible, you've got to operate for at least 2 years and have a minimum turnover of 400k. Now, we've realised that maybe for BAME-led organisations, this might not be achievable. So we've lowered that threshold to 200k. We've kind of realised that, again, you know, these kind of little nibbits of being able to equal the playing field as it is weren't that great kind of what we were doing. So we decided to create a grant program alongside the loan to go ahead with it. So the grant program is open to BAME-led organisations. It's an unrestricted grant program with a minimum, so you have to apply through the RLF to get the loan, and then you'll be assisted with the grant program. Again, this is only to BAME organisations in England. So we've done this because through our learning and development team and influence team and through partnerships, we've realised that there are quite a lot of social and structural barriers to BAME organisations accessing loans and grants. So we've created this fund in order to even that playing field. Now, we have partnered with 2 partners, Create Equity and Ubile. Philip is from Ubile, so he will be talking a bit more about the Flexi Finance programme alongside the RLF. And so far, it's going quite well. Fingers crossed, but the deadline is in 2 days, which is a very, very tight deadline for us. But I will hand over to Philip now, who's going to talk a bit more about Flexi Finance.
Thanks, Hannah. That's helpful. All right, yeah. So I'll just give a quick introduction to Ubile. Some people might have heard of the organization already. Some may be less familiar. So Ubile, the Ubile Initiative is an organization which was founded around 14 years ago. And the organization has been really active in the last couple of years, particularly around supporting the resilience and the sustainability of Black-led and Black and what we're calling Black and racially minoritized led organizations across the UK. And, you know, looking at how to find solutions to some of the new social issues arising because of COVID, but also some of those real persistent social and economic issues that the diverse communities of the UK have faced over the last 30 or 40 years. So particularly, Ubile has been involved recently in, you know, responding to some of the challenges arising, working with national partners. Particularly, I'll give you an example, a couple of examples. We've been working on the Phoenix Fund, which was a 2.4 million fund, which was small grants, which were lottery money, but they were very specifically targeted at Black and racially minoritized groups. And that 2.4 million has led to a ring fencing of £50 million, which will be targeted, which is lottery money, which will be targeted again at Black and racially minoritized organizations across the country. That's very much in the grant space. We've also been working in partnership, well, as a delivery partner on the EDP program, and that's involved, you know, giving grants of £30,000 plus training and support for social purpose organizations to help them develop trading income and, you know, move towards stronger sustainability and less dependence on grants. And yeah, at the moment we are a partner on this flexible finance program, which Hannah has mentioned, and it is part of the broader government-backed recovery loan fund. And so I guess what this flexible finance program is about is creating wider access to organizations who historically haven't considered social investment, and where there are barriers. So for example, you know, when we're talking about, you know, BAME or, you know, Black and racially minoritized organizations, we're talking about organizations who have historically been underfunded, who have historically had less access to capital, less access to loans and social investment, and haven't got that track record, and I guess haven't got good faith in the lending systems in the UK, and don't believe actually that often that they will be successful in approaching banks for a loan to support their business and their social businesses. So in terms of the actual criteria, what's happened is we've actually reduced the criteria from the broader eligibility, which was a turnover of 400,000 for the Recovery Loan Fund. Now for the Flexible Finance Fund, that's been reduced down to 200,000 turnover. And the minimum loan size required, or the minimum loan size you could apply for in the main RLF fund was 100,000, and now that's been reduced to 50,000. And the great thing about this program, when we talk about blended finance, is that you know, the loan can be matched with an unrestricted grant of up to 100% of the loan value. So that means that organizations can apply for up to £100,000 loan, at about 7.5%. And then they can apply for an unrestricted grant, again, of up to £100,000. And that's really important, we think, because it helps organizations to, I think, de-risk a little bit, themselves, particularly where they may not necessarily have a particularly strong balance sheet. But also, I think it provides really an incentive to kind of get into the system of social investment, understanding that they can deploy loan funds to generate streams of income that will then be able to pay back the loan and produce, a further surplus for the organization. And I think what's also really exciting about this program is that there's also the opportunity for organizations to have a support package of bespoke support. And there's a budget on top of the loan fund, and the loan and grant. And there's a budget which is around £7,500 per applicant or per successful applicant. And what that means is that we can deploy money to really help if there are any capacity gaps in the delivery of the organization's plans for how they're going to use the loan, to help the organization with very specific needs. If they have needs around, let's say, financial modeling, or, they have needs around strategic support, we can actually deploy, resources to help them along the journey. And, that's something we find really important. And I think the interesting thing about this model is that, SIB has been working with Ubile, which is really a community-led organization, and as well as Create Equity, which is another Black-led organization in the arts space. And we've been really working, quite well collaboratively to review what applications are coming in, look at who might be best placed to manage the relationships, and, really, I guess, take the applicants on a more one-to-one journey where we can say, well, actually, if we had an applicant who didn't quite meet the £200,000 turnover, maybe they had £170,000, we might be able to look at them and say, well, actually, this organization might well still be able to benefit from being involved in the program, and might be able to then, we could then help them into the program rather than, that computer says no approach, I think, as John mentioned, which, often when you're applying coldly on, some application form, and then the computer crunches the numbers, and if you don't reach the threshold, then you don't reach the threshold. So, we're trying to really be flexible with this, provide bespoke support before application, or in the application process, and after, after the loan has been agreed for the organizations. So yeah, I guess that's probably a good overview. Sorry, we didn't have a presentation to show, but we can share more information as well if anybody's interested, and look forward to hearing some questions. I don't know, Hannah, if you want to add any more than that.
No, I think that was perfect. Thanks so much, Philip.
Super, thank you very much. Oh, you were all very, very kind. You all kept to time, so that was really good. I didn't have to send anybody any direct messages, so you all did brilliantly, which was great. We're gonna spend some time now in QA. Thanks, Bertie, for kicking us off. Some great questions there, but I'm hoping we're gonna get some more as well. You can do a number of things now at this stage. You can either pop your hand up, virtual hand that is. You can send me a direct message and I'll keep my eyes open. You can pop something in the chat and we'll go from there. Okay, I'll answer Asha's. Oh, Asha's also. There's a couple of other investors that have been on the call. Asha from the Architectural Heritage Fund, and also I know we've got Annabelle from Key Fund as well. Joe's also here from CAF. So I did pop in the link earlier to the Investor and Advisor Directory on Good Finance, where you can find a sort of extensive list. And the idea with doing these investor clinics is each time we do them, we'll invite a different set of investors, because what we're trying to give you is this picture of not all investors do the same thing. And that's one of the challenges, I think, but we're going to get onto that in a minute. So Olivia, if you can spotlight all the speakers for that would be great. And then I'm going to ask some of these questions. And yeah, keep those questions coming. That would be great. Right, let me start with the first one, because I thought this was a great question from Bertie. And actually, it's a good one because it allows me to ask you all the same question, which is good. So perhaps for each panelist, apart from the organic traffic to your own websites, so if you know to search Charity Bank, what do you find the best way to advertise your social investment opportunities? So I think that actually plays to some of the other questions we've got around the barriers, etc. But let's start with that question. I'll get each of you to answer it, and then I'll also give you a little bit of contextual stuff I think that we're trying to do around this. John, do you want to go first?
Sure, yeah, I'd be delighted to. I'm not a massive marketing guru, but I'm happy to answer this question. Yeah, absolutely. So I think first of all, LinkedIn is a good format for talking about what you do. I think you've got to also reflect customers, because people want to know who you're lending to, what sort of organizations, what they're doing, what impact they have. Going to events, so a bit of face-to-face, that seems to have come back in a bit. We've probably had that 2-year hiatus. So that might be things like a locality convention. It might be local events. I'm going to one tomorrow in Bath. So just going and seeing people. That's a charity-wide one. So people come to your stand and will ask you questions about what you're doing, and might tell you about a funding proposal that they've got. That's always really good. More in the past, we do funding surgeries as well, where you can get booked slots of time where you sit down with the organisation. They can ask you questions again, see if there's a good fit there for you, see if you can provide kind of answers to their questions around finance. I think that's really good. Networks as well, you build your network, so you're speaking to not-for-profit organizations, potentially solicitors as well. They're really good as well, because they'll give you kind of sector feedback, so they'll let you know what's going on. What are charities, not-for-profit struggling with or need help with as well. So a total mix. Obviously website, you've got the search engine on Good Finance as well. So it's kind of lots of different ways, and then people will call as well with an inquiry. That might happen, and then 18 months later, they might come back to you having formulated the plan. So yeah, and I would always advocate that as well. If you're thinking about something, give a social investor a call, see what they think, because that might inform your next steps.
Lovely, thank you, John. Anoushka, other things, is there anything else you do? Would it be all of the same?
Yeah, so John mentioned building out your network. I would say historically we have been very lucky that we've had a very healthy pipeline through our website. But what we've been trying to do in order to kind of diversify the organizations that we are giving capital to is making sure that we do more outgoing work. Something we've had really good success with over the last couple of years is using partner organizations to help build our pipeline. It's one of the reasons we chose Hatch Enterprise to partner with us on the accelerator. We know that the network we have is predominantly made of organizations that are, already past many of the early hurdles to getting finance. But Hatch is an organization that has networks within groups of founders, people from ethnic minorities. So it's really about us leveraging the expertise of people who, might be better placed to connect us with some of those organizations right now.
Okay, thank you, Hannah. Sorry, Anoushka, I'm going to ask you, Hannah, next, that same question. And Philip, I'm going to come to you and talk about what aren't we doing? What doesn't that do? And definitely we've got some sort of more context to that as well. But Hannah, talk to us about social investment business. Anything else? Anything different?
No, just kind of adding on to what everyone else has said. I think definitely having a good partnership network in your tool belt is vital. We've had some potential investors come to us and we've obviously had the discussions and realised that, well, maybe we're not kind of the right organisation to support these people. Let's refer them on to somebody else and vice versa. So I think working with a good partnership is definitely key. And like John said, going to different events, doing more face-to-face work, virtual events like this, I think it's really, really helpful. It's, you can get a lot of traction on the website, but at the same time, speaking to people really fleshes it out. And I think that's quite vital in making those connections. I'd be interested in kind of finding out from the flip side, though, of how organisations try and find social investment as well, if possible.
Okay, great, lovely. Thank you, Hannah. Philip, so everybody's doing all this stuff, right? But it's clearly not enough, because otherwise we wouldn't be seeing those and lots of things you said. I want to pick up on those afterwards. So, you know,
Sure.
what more do all the social investors need to be doing?
Well, I mean, just in terms of what Ubile has been doing, particularly in relation to flexible finance, we've been, you know, sending stuff out via our own immediate mailing list, which is kind of quite an important tool for us. We have about 5,000 people on our mailing list, of 5,000 subscribers, which include organizations or diverse organizations from across the UK. Social media is also another interesting one, which I know, you know, people mention LinkedIn, but, you know, there are sometimes coming a little bit away from LinkedIn and looking at some of the Facebook groups. You know, there are Facebook groups for Black-owned businesses, which have tens of thousands of members, which are probably not known, you know, some of the mainstream social investment organizations. You know, that could really, you know, provide, I guess, access and, you know, I guess maybe give, you know, a different type, a different profile of organization who are seeking social investment, the access, because sometimes if you just don't know things exist, you don't know what funds are out there, you've got no chance of ever applying. And so, yeah, I think those things and you know, getting down to community level, I know it's difficult because, you know, of time and COVID restrictions and so on, but attending more community-based events, I think is going to be really key as a way to kind of build that relationship, so you can see there are real people behind these application forms, because sometimes the application forms themselves can be a barrier when people don't particularly have, you know, a really strong confidence or track record of completing them.
Great, lovely. Thank you, Philip. Hannah, if you want to come in, you've got your hand up.
Yeah, I just wanted to add to what Philip said, really, because Ubile recently co-funded us to do an open day, us meaning base, and Olivia came on Tuesday. Is that right, Olivia? And you had your henna painting done on your hands. And I think it's key that, you know, social investors keep these links with grassroots organizations through many networks that exist out there that represent grassroots organizations. So it might be that you can't get to 1,000 organizations at grassroots level, but you might get to, say, for example, Vora Voice, which is like one of the largest Indian organizations in Britain, and you might use their networking to get to all those Indian organizations. I'm doing a piece of research, as Olivia knows, which hopefully will finish at the end of the week. And that is all around, Esme Fairbairn funded it, and it's all around finding out what the barriers are for all the different diverse communities out there, because we can't just lump BAME into one pot and say, oh, do you know what? Our records show that BAME communities aren't accessing finance. We've got to look at the Bengali community, the Pakistani community, and actually look at each community separately and see what their barriers are, because our research is showing that it's quite diverse. Yes, there's commonality, 80% plus in every single community that we work with. They weren't aware of social investment, social enterprise, which is huge, really. A lot of work needs to be done. But there were a lot of disparities as well. And some communities felt comfortable with taking on debt, and some communities felt absolutely no way, we're not having that. You know, if we look at the Indian and the Nigerian communities, that's a great disparity there. Anyway, I've taken enough of your time.
No, that's lovely. Thank you, Hannah. Can you just tell everybody what BASE stands for, so
Right.
people know?
At the moment, BASE stands for BAME Advocacy for Social Enterprise. And BASE is a platform for many BAME networks from Greater Manchester. And we're hoping to emulate it in other parts of the country in the future. At the moment, we're quite embryonic, and we are registering as a community benefit society. And hopefully by the end of the week, we will have registered finally, which has been a long process. So
there's a lot hanging on the end of this week, Hanna, I'll tell you.
Yeah, we've got the research finishing at the end of the week.
I know.
Hopefully, GMCVO will release that research. At the moment, I'm employed by GMCVO. I'm going to be seconded to BASE, but in the future, I'll just be employed by BASE, and BASE will become its own independent entity.
Yeah. Smashing. Thank you very much, Hanna. That's really helpful. I think thanks for coming in, and anybody else, feel free to pop your hand up and ask your questions. I was just going to come back and do a little bit, if I can, a sort of context and framework around that, and this is probably from Good Finance's perspective. So I know 7 years ago when I joined Big Society Capital, I remember saying, because I ran a social enterprise before, so how do you find all these social investors then? I remember being told there was an A to Z list of just the regulated ones on our website, which wasn't particularly helpful, because it was probably, if you started with Alia and really needed to speak to Unity Trust, there was an awful lot of people you needed to phone through before you could actually work out who does what. And I think it's been great already just from hearing John and Hanna and Anoushka talk about, they've talked about the types of lending they do and where they start and finish their lending and the types of organisations they lend to. And that, I think, is a challenge. So if you're already in the conversation, and many people aren't, so we'll get to that, it's knowing who's the best people to speak to. I remember having a conversation with an organisation in Birmingham, and they said, we had all this conversation with this investor, we got all the way down. And I still said to them, well, why did you start with them? And they said, well, because I met them at an event. But I think relatively, that was probably the outside lending scope. And I said to them, well, actually, that's really funny, because I would have said you go and speak to this person and this person. And what was quite interesting is in the end, they ended up getting their investment from that lender, because I think it was probably not the closest match in terms of outcomes. But I think as everything everybody's talked about here, I know from Good Finance's perspective, when we launched the website, if I'm honest, I didn't think that many people, it's still quite niche. It's not for everybody, but we're now well on our way to 500,000 unique users. So I would say that in addition to all of the things that we've talked about, all of the social media, I was really interested to hear your the things you were saying, Philip, about Facebook, because, and Instagram, and perhaps we'll catch up about that afterwards. But, Good Finance has probably the single most dedicated amount of traffic for people finding. The problem is, even for Good Finance, we are not, in the conversations with people who aren't already in the networks. So we've done Let's Talk Good Finance all around the country with lots of different partners, but it's still not good enough. The reach is not with the organisations that are struggling, or actually aren't struggling. They might not even know this exists. I thought that was a great point from Hanif as well. And I think what we're all realising is that we've got to get outside of the comfort zones of the networks. We've got to partner, and that's certainly for us addressing imbalance, where we've been working with Khan, and we've been working with how BASE, the sort of early days of BASE and the Black Southwest Network, and Turn and a range of different people to find out how actually we can try and break down some of those barriers and support. Let's move on to another question, if that's okay. There's quite a lot of excitement about seeing that research, and there's a few questions about other bits and pieces around research. I've got another question, I think, from Bert, but I've got a couple of others as well. So please do feel free to keep posting them in there. But I want to cover this because I think it's really important. Scrolling back up I've lost it now, and I had it there. Oh, it was about the barriers. Philip, I'm going to come to you first on this, it's okay, because you started to touch on this. So it's about what are some of the common barriers to lending to, well, we can talk about the common barriers to charities and social enterprises, but what about the common barriers that exist on top of that if you are an organisation, a diverse organisation, and what basically asking is, what can they typically do to improve their chances of receiving finance? So we can look at this in both ways. We can ask the investors what they can do, and perhaps I'll come back to that. But Philip, just from your experience, what are those barriers, and then what advice would you give to those organisations to improve their chances?
Sure, I think to some extent a lot of the barriers are often around mindset of organizations where, you know, they don't really understand how they can deploy capital, you know, loan capital in a way that can make their organizations more resilient and, you know, create new streams of income. So when they hear loans, you know, these things kind of mean that, oh, that's risk. And with risk, then for these organizations, they kind of tend to shy away from risk. You know, when you're talking about, you know, Black-led organizations specifically, we know that Black communities in the UK have lower home ownership rates, so will have less assets within their communities to begin with. And so, you know, some of the balance sheets of some of the community-led organizations are, you know, just not as strong. So that can provide a barrier to some of the, you know, traditional lending when you haven't got a strong balance sheet for your organization. But yeah, I think there are, you know, cash flow as well is a big challenge that we've seen, but also I think dependency on grants is another one where, you know, organizations only have, you know, one main funder perhaps, and you know, if that funder for any reason was to not refund them or continue to fund them, then the organization could quite easily or quite quickly fall into trouble, which then presents a risk for lenders. So I think there's a number of challenges, but I think it's also, and you know, one of the key things is how do we provide organizations like with different models of how they can diversify their streams of income and how they can use social investment finance to do that. I think that's like a key challenge. I don't know, Hanna, if you want to say any more on that.
No, yeah, I completely agree. I think as well, like Philip previously mentioned, if you go through an application, if you're thinking, oh, actually, yeah, I am going to apply for some finance, and you go through the application and realize that the computer does say no, it's quite a big setback for yourself in terms of mindset as well. So just by reaching out to the actual organization itself and kind of saying, oh, well, you know, is there something that can be done about this? Which is why with Flexi Finance and the RLF, we do have a short application, but we do have our relationship managers kind of ready and primed to talk on the other end of the phone or via Zoom or email, just regarding what you can do to strengthen your application and what you could do to change it in order to kind of get the loan or grant.
Great, lovely, thank you very much. That was really helpful, and I think that, you know, there are, for investors, so if I flip this round, because actually there's another question here about how funders do this. I think if you flip this round and look at some of the statistics, and I really appreciate Hanif's point that it's quite difficult to use some of the statistics we get because they are quite general, whether they're by region or they're just around, you know, all protected characteristics. But it's even at that level, the data is shocking, you know. So and Philip talked a lot about confidence, and when you look at some of the statistics that say that, you know, 40% of diverse leaders are likely to think that either they'll be turned down, that there's too much time and too much hassle, or they don't have the capacity or the confidence to make the application. Those are not statistics that we can live with. And so what we've got to look at is how do we change that? So I was thinking, if I had to sort of, I'm usually a woman of many words, but if I had to put this in just three, if you only gave me three, I would say it's about reach. And actually the whole Addressing Imbalance program was driven out of Charles, who's the chief executive of CARN, so the Afro-Caribbean Health Network in Manchester. I remember him saying during the pandemic, I'm really fed up of people saying that my community is hard to reach. We're not hard to reach, just not in the right conversations. In other words, it's your problem, not ours. And Addressing Imbalance was born out of my frustration that I kept reading this and, you know, what could we do rather than just sit around talking about it? So reach is something we've got to push outside of the conversations that we would normally have. Knowledge, there is something about knowledge presenting power, and that if somebody's got lots and somebody else has got none, then that doesn't help. So there is something about sharing knowledge, but also not having you know, a superior academic upper hand. That's one of the reasons why I really like being called out on the use of jargon, because it's made me feel quite uncomfortable in the past. I don't come from a financial background. I sold ladies' clothing for 22 years. So this has all been a learning journey for me. And then the last bit is about confidence, because, you know, it is often about having more faith or more belief. And that is about breaking down these relationships. But also, I'm a great believer in peer stories, that if somebody else in your network that you know that is relatable to you can talk about their experience, the good bits and the bad bits, the learning, that comes across as a lot more authentic than any one of our lovely social investors talking about, because this isn't their day job. Yeah, these are the things they want to share. So I think peer learning plays a really important part in this as well. I'm going to come to, we've had a question by Olamide. Sorry, I hope I've said that right, your surname. I don't know whether you want to ask this question yourself, Olamide. Please feel free to come off mute if you want to. If not, I will read it because I think it's quite a good summary of a range of things we've talked about, but I'm quite interested in the conversation, the question that lies behind it. Olamide, do you want to ask or shall I go ahead? Okay, I'll go ahead. The question is, any suggestions for funders on how to support grassroots organisations toward getting their investment application ready? She says that we've got business coaching was mentioned and any other considerations and any other resources. Thanks, Annabelle. There's a couple of people planning going out, and Susan, we can share any contact details people have. So yeah, we've talked a bit about reach and we've talked a bit about sort of some of the other particular programs, but from the perspective of those of you that are sitting on panels, that are sitting on organisations that provide funding, you know, what would you be saying back to your organisation? What do we still, you've told us about things you're doing now, but what do we still need to do more of around helping organisations become, I don't like the term investment ready, but because it covers a whole range of things, but I suppose let's talk about it as having the confidence to take on investment. What do funders need to do? I suppose that's the challenge back. Anoushka, shall I go to you first? What are funders?
Yeah, sure. I think, I guess I'll address the last bit of what you said first in terms of confidence. I think the onus is really on funders to, you know, stop using jargon, explain things in simple terms. I think from the CAF side, what we really try to highlight is that, you know, we're not alone in the sense of if you go to a high street bank and you borrow some money and then you can't pay it back, we're going to come and take the TV off the wall. It's not like that. It's not quite a grant, but it's supposed to be much more of a partnership, the lending relationship. But I think the onus is on us to explain that, you know, debt does conjure images of risk and fear, particularly in ethnic minority or some ethnic minority communities. In terms of the part of the question, like what resources need to be provided. I think the biggest constraints are time and money, as with everything. And that's why I think things like the Reach Fund really, really help with that, because when you give an organization grant funding that they don't need to pay back to hire consultants who have expertise and time, you really, really reduce that burden. So that's something, yeah, we'd love to see continue in the sector, and obviously something we're trying to in-house a little bit with things like the accelerator.
Lovely, thank you, that's brilliant. Hanna, anything you want to add? So Anoushka's challenge is, you know, the baton is with us, we need to do more.
Yeah, no, I think Anoushka summed it up perfectly, if I'm honest. It is kind of about that confidence thing as well, and us being able to really lay everything out in the open. Yeah, I think that's, she summed it up perfectly, if I'm honest. I just kept nodding along, being like, read my mind.
Okay, John, anything you want to add? You don't have to, but you can.
I think we just need to be very real when we're giving feedback to early stage organisations. They're coming to us and saying, this is what I plan to do and get investment in. I think we need to be really clear and say, yes, this is really good, or no, this isn't great at the moment. I like what you're doing and I can see the impact behind it, but you need to really think about developing your business plan. I think there's room for sector support organisations to give guidance to organisations. That is a little bit, depends on where you are in the UK, unfortunately. Some are great, some real good examples. Hatch Enterprise, fantastic. We know they do great work. We know there's organisations like Black Southwest Network in Bristol that are also doing really good work and are really passionate about developing enterprise in the community and in the areas that surround where they operate from in the centre of Bristol. The confidence to take on investment, I think, yeah, jargon's terrible and I don't like it. I think let's not overcomplicate what these things are.
Yeah.
These are loans most of the time, and a grant is non-repayable. So the grant's going to be given to you, but you have to use it for the purpose it's been given to you to use. And the loan, again, will have a purpose behind it. And you have to kind of look at the two things, but let's not wrap it all up in terminology that doesn't help anybody. So I think our responsibility as social investments is to break that barrier down. If someone comes to us and explain clearly what's going on. Hanna mentioned strengthening applications. I think that's really true. Giving good feedback is really important as well. I have unfortunately seen kind of people go back and say, no, we don't do startup funding. So somebody's come to them and gone, can you help us? We'd like to do this and start this organization. And a one-liner back on email. I'd feel totally deflated if I got that and I was setting up my organization. I'd be like, well, that's a real kick in the teeth. I think we need to be giving people good things to look at. I think free resources need to be clear on what they are out there. My background before I joined Charity Bank, we looked at things like NatWest Business Builder, free resource online. Just use these things. Like, there are good things there. That's a high street bank. Yes, it is going to be, if you go to them for kind of high street style lending, it's going to be a computer-based decision.
Yeah.
But there are also good people working with that organization who are pushing forward and trying to make changes as well. So I think it's kind of a bit of a mix.
Okay. I think that's helpful, John. And I know, Philip, you want to come in as well. So, and I've just posted some more free resources, particularly around, actually they came out of the Connect Fund, which is another access program, but are helping you around some of the planning and the information, cost information. There's some worksheets there, which Key Fund developed, and also just about that transparency of cost. Philip, you want to come in?
Yeah, just, for me, I feel like there is this challenge that if people look at the data of if funders look at the data of who they're actually deploying capital to, I think that is kind of a key thing that's needed, is to understand, where is your capital going and which communities are your capital, which communities are your capital not going to. And I think that's one of the things I have to definitely commend SIB for, actually reviewing the data, looking at the applicants coming in, realizing that, some of the more diverse organizations were dropping off during the application phase, were not completing applications, not seeing the process through, and understanding that actually maybe we need to do something that's targeted. And I know that can be, I guess, ideologically challenging for some funders to say, well, actually, let's have some ring-fenced resources and let's create specific funds that target certain communities. I think that can be ideologically challenging, but I think it's a bold step and a brave step that's absolutely necessary to start to redress the balance of historical underinvestment and historical inequality. And if you look in the US, banks and other social investment organizations are a lot more robust, because I think they have more legislation around disseminating funds into more diverse communities and making more strategic investments in deployment of capital. So yeah, I think that is something that I would definitely challenge funders in the UK to look at.
I think you're absolutely right. And I noticed that Hanna posted the link, and there were a couple of other questions from other investors in the chat. So looking at the data, looking at where the money goes and being really, really clear and transparent. And then that is I suppose, that's, how we measure ourselves going forward. That's how we can look at the difference we need to make. Thank you all. I'm going to just try and wrap up with a couple of different bits. Giving you notice, I'm going to come to all of you just for one top tip. So just one takeaway, that if there is an organisation sitting listening on this call that is concerned about any one of these things, whether it's about the time, the capacity, the complexity, knowing where to go, whatever it is, just one key thing that you'd like somebody to take away from this. Not necessarily have to be a top tip, but just one key message or takeaway, that would be great. I just thought before, while I'm giving you just a minute to think about that, I just also talk about this piece about support. So yes, we've talked about the specific funds, the incubators, we've talked about Reach, we've talked about other support organisations. I just wanted to pick up that point that John talked about so support around the country. I was in Liverpool yesterday at an event, and I had the local CVS organisation asked a question. This is really interesting. We with NAVCA developed a couple of tools. One of them is called Scoping Social Investment, because one of the things we feel passionate about is that any organisation that supports other organisations, so be that capacity builders, business development or support organisations, membership networks, local infrastructure, I'm not talking roads and rail here, I'm talking community and voluntary sector services, or any organisation that has members, will often be the place that that organisation will go to for support. And it is the case in many cases, there will be good understanding of grant, but not necessarily good understanding of repairable finance. So we came together with NAVCA to develop this tool, which Olivia's just posted the link to. And what it does is it helps organisations to go through, and it sort of assigns them a character or a characteristic of their organisation, and then suggests ways that if that organisation feels that their members they would like to be able to give better information around repairable finance, we enable them to help to do that. I'm a Midlands girl, in my own area with the West Midlands Combined Authority, when we looked at our sort of 20 leading anchor institutions or capacity builders, we only have one champion amongst them. Many of the others are what we would call observers or investigators. So actually upskilling and changing their knowledge, they can better support their members, is definitely something that the Good Finance team and I are really involved in. So before we come to the final wrap up, one quick thing, fairly quick because I'm conscious of time and I just have one more slide to do. Hanna, I'm going to come to you first. One very quick thing.
Yeah, I'd say just reach out. I think any of us on the call today, any of the speakers, would be more than happy for anyone to email or message. Definitely just reach out and get that your support for sure.
Yeah, I would have done that in song if I'd have known it was coming up. Would have been really good. Anoushka.
Yeah, to add to that, I'd say go in with the mindset that social investors want to lend to you. We are looking for a way to say yes, not reasons to say no. Really take that attitude. Lovely. John.
Oh, it's tricky. Yeah, I'm a supporter of reach out as well. And I think it's, look at what the resources are, have a little look before you, and then make that contact and do it early. Do it early on. And get a feel for it. Definitely. Love that.
Next time I do one of these, I'm having reach out ready. Go on, Philip.
Yeah, I think it's kind of everybody should this thing about reaching out, but also sharing, and when you find opportunities, do share them with your networks, do publicize them, do actually actively approach people who you think might be suitable, because sometimes people might just opt out and they might just get it on a newsletter and they just think, oh, it's not for me. But if you were to actually approach people directly and say, hey, have you really read this could be really helpful, and then something might happen from there.
Thank you so much. Thank you, all of you, for your contribution. I'm going to just do one more slide to finish up. As I said, we will share the slides, share any of the links in the chat, and also share contact details afterwards. Yeah, we'll just go with this final one, please, Olivia. Thank you. Brilliant. So I put up on screen these 7 lessons learned. Really important for me to say, these are not our lessons. Like, we're not telling you these are the lessons. These are the lessons that we've got from having 64 different peer speakers from around the country doing different things with different communities, but they've all taken on investment, or at least been through the investment process. Not all of them decided to take it up, not all of them were successful. But these are the 7 things that they've said to us, and you'll have heard some of these throughout the conversation today. So number 1, social investment is not benevolent money. This bit about what makes a social investor social, you do have to pay it back, often with interest. So there does need to be some kind of trading income, but the social investors do different things. So understanding what type of money you want and who will do what is really important. Impact matters. That's what makes a social investor social. They care about the difference that your money makes. But again, it won't be down to them to dictate how that should be done, but it will be for you to tell that story. It's about much more than the money. Somebody asked me this question yesterday about, how do you get across that a social investor, to be social, is different to a mainstream lender? Because we don't say that mainstream lenders are bad. We say if that's where you think you should get the money from, it might even be slightly cheaper if you can get that money. But when you borrow money from a social investor, it's not just a transactional relationship. I have known many investors to, it's always been covered by, I think it was Anoushka, but variations in a loan, extending the amount of time, giving capital repayments. I've known investors to go into contract negotiations with people because they'll put the money up to cash flow the contract, help people get board members. This is a relationship you're going to be in, which is why I usually come to this lovely quote I have from a social enterprise who took on investment. It said he had to kiss an awful lot of social investment frogs before he found his social investment prince. What I really think he meant was just finding the right investor for you. So it's not just you have to go with the first one that you find. Honesty is always the best policy. Things will not go according to plan. All right, it's not how it works in the social business world. You do your business plan based on your best assumptions at the time, and that's probably not how it will work out. I thought Anoushka's last bit of information or guidance was really good. Social investors are used to having to make changes. They're used to these conversations. They want to help you. They won't lend you the money if they think it's the wrong thing to do. They will help you work through difficulties. So do not stick your head in the sand. If you take investment and things don't go well, pick up the phone and chat to your investor. Why isn't it cheaper if it's social? That all comes back to that point about risk, who you're borrowing for, where their money comes from, how much risk they can take. It isn't a sort of, you can come up with a number. One of the biggest problems that we often have here, though, is that we often don't compare apples with apples. So we talk about like mortgage or bank rate lending on something like a secured loan when we're actually talking about unsecured lending. And they are different things and they cost different things. What I would say to you is shop around. Be sure that you use the cost of capital resources. Make sure that you talk to a range of investors. Make sure that you're comfortable with that, and make sure that you think that that's a market rate for the borrowing. Due diligence isn't fun, but it does make your business better. Sorry, I apologize, because at least 2 people that have heard this joke before. It's not a joke, it's a real thing, but I have only found 2 people enjoy due diligence, both based in Nottingham. Don't know what that's about. Not many people enjoy it because it's part of the process of giving information up, but I have heard lots of social enterprises and charities say that it's made their organisation better as a result of going through the process. And that's even been the case with some of the people who didn't either decide to take up the investment or weren't successful in getting the investment. It always takes longer than you think. So John said, reach out early, talk to people. I often say that social investment isn't best when your back's against the wall or it's a last situational scenario. I'm not going to say that it definitely won't work, but it's probably not the best situation to be in. So think about when you need the money, talk to the investor about the timescales and start having those conversations early. There was lots more that I wanted to say, but I'm sure that we can cover them at our future clinic. I hope that you found it useful. There's been quite a lot in the chat. I'm sure there will be more follow-ups. Don't forget that today was just a selection of some of the investors are available. There are, I feel like I'm somebody from the BBC when I start to say this, there are other social banks available and other social funds. I've posted the link in there from Good Finance. And as always, the Good Finance and team and I will always do whatever we can to help. So if you think that partnering with us, being part of our Addressing Imbalance programme, or there's something we can work on with an event with you, then we'll be always happy to do that. Finally, but by no means last but not least, as such, thank you to all the speakers for giving up their time today. I hope that you find it useful, and we'll take away any feedback you have around this investor clinic, all about trying to break down those barriers, get into the conversation, and we'll look forward to doing another one soon. Thanks all.
Thanks so much.
Thank you.
Thank you, guys.